The broadcast is now starting. All attendees are in listen-only mode.
Hey everyone, this is Kevin. I just want to do a quick sound check before we're ready to go. So if you can hear me, either type a Y in the chat box or perfect. Thanks Lionel. Thanks Sean. Thanks David. It looks like you can hear me loud and clear. So we still got some people piling in here. So we'll wait a couple more minutes and then we'll get started. Okay, welcome everyone. Hopefully you can hear me a little bit better. A couple people have said, could you speak a little louder? And the sound's very low. So Francisco, AA, David, does it sound any better now? Let's see. Sounds better. Okay, a little better. Okay, this is live, just for those of you who don't know. So it's I'm in Cleveland, Ohio, and it's a nice, crummy-looking, cloudy day with a lot of rain. So hopefully where you are, the weather's better. But I just want to welcome you. I'm Kevin Davey, KG Trading Systems, and today I'm going to talk to you about entry secrets that work in today's markets. And I'm going to give you a couple entries that I use, which you can take and put on whatever market you want. Hopefully you'll find some use in it. So with that, this is being recorded, so in case you need to go back and listen to it later, you'll get that afterwards. And if you have questions, feel free to type them in, but I probably will wait till the very end to answer them and try to answer them all at once. That'll just help keep me on schedule because sometimes I have a tendency to ramble. All right. So today we're going to talk about entries, creating entries. It's kind of interesting because I do a bunch of different free webinars, and ones on entries always seem to get a lot of people interested, and a lot of people sign up, and there's a lot of people in the room right now. Actually, it's getting close to its max capacity. So entries are something everybody wants, and we're going to talk about that. But my goal today and the time we have together is really, this is just part of what I do to get you on the path to developing profitable trading strategies, because that's really what it's all about, right? If you don't have profitable trading strategies, nothing else really matters. People always talk about psychology and money management, and all those things are important. Don't get me wrong, but you really need profitable trading strategies, or else you're just going to slowly lose money. You think about yourself whenever you go to a casino, the odds are not in your favor, and about the best you can do is slowly lose your money and have a good time doing it. But we're talking about something different here. We're talking about turning the tables and actually having profitable trading strategies, and then being on the path to do that the right way. So entries are just a part of that. And if you stay till the end as incentive to listen to me for the next hour or so, I'm going to be giving away an autographed copy of my book. If you're not familiar with the book, it's called Building Winning Algorithmic Trading Systems, and it's usually in the top 10 of futures books over at Amazon. All right. So, the first thing, you probably attended a bunch of these webinars, not necessarily mine, but just people in general. What makes this different? And, I hate to toot my own horn, but I think my background makes things a lot different. I do trade full time, and I haven't done it for all 25 years that I've been trading. I was probably like a lot of you, I was a part-time trader, made the jump to full-time. And then back a little while ago, I finished in first or second place 3 years in a row in a worldwide real-time, real money year-long trading contest, and that was against some of the best traders in the world. So that was pretty cool, and that kind of convinced me that, hey, maybe I could actually do this successfully. And then again, I just mentioned my book, and anywhere you go, if you Google my name, you probably will never find out that I've scammed people, and you won't see a bunch of disgruntled people that have taken my course or read my book. And I kind of pride myself on having a good reputation that way. Unfortunately, sometimes I speak the truth and people don't want to hear the truth, but that's kind of the way I am. So I think in the long run it works out for everybody. This is a great little quote that the website tradingschools.org wrote about me. And at the end they call me a little rat. So I used this little picture as a picture of me. And the point that they were making is, hey, you're a successful trader. That means you're taking money from people who aren't successful, and so you're a dirty little rat. So anyhow, I've gotten to the point where I've done a lot of things right in my trading, but I've also done a lot of things wrong. I still do things wrong. Just last week I did a webinar about the 2018 meltdown in stocks, where everything just collapsed real quick. And I spent about an hour talking about all the things I did wrong and how I was going to fix it. So I'm definitely not above still being wrong. And by the way, if you want to watch that, just go to my homepage and there's a link to a YouTube video on it. So I've done a lot of things wrong, and the good news is that that can kind of help you in what you're doing, because I've been doing this for 25 years, and after about the first 10 or 15, I came to some realizations. For example, optimized systems don't necessarily mean they're profitable systems, right? And here's a good example of this was actually on Bitcoin, some testing I was doing late last year, where it was pretty easy to get this really nice equity curve, and then it went live, and of course that corresponded to right around the peak in Bitcoin in December of last year, and then it just kind of collapsed. So this was kind of an optimized system that turned out in real time not to be profitable. And you might say, well, I'd never make that mistake. Well, it's really easy to make it. And the trick is knowing what to do not to have this kind of situation. The second thing is there really is no holy grail. I know a lot of you are just starting out trading, and you read about all these people doing great, and how easy it is. And, I just want a second income and, something consistent. I'll tell you what, it's really hard to get that kind of thing with trading. Trading is up and down. It's living through drawdowns. There really is no perfect indicator or perfect system or anything like that. There is no holy grail. And the sooner you realize that, the better off you're going to be. So, and the third thing is, if you're scared with trading, none of this works. Your fear can overrule everything. And I can tell you story after story of people who've had decent trading systems, and because of their fear, they couldn't pull the trigger, or they couldn't honor their stops. They had a mental stop, and all of a sudden that disappears. Or they couldn't keep the system turned on to do automated trading. There's all kinds of things with that. So those are some big things I learned. And of course, the way I learned them was by losing money. Even if I read it somewhere that, there is no holy grail, I probably didn't believe it. And I would still try to find that. And I spent a lot of time doing that, and it just never worked. So the good news for you, uh, if you decide to do some work with me, is you get to cheat and get a much easier way than what I had, because I did just about everything wrong. And for those of you who've read the beginning part of my book, you understand that, because I lay it out, where days where I was practically throwing up because I was just so torn by the markets. That's what happens. But it doesn't have to happen, but that's definitely what could happen. The there's an easy way and a hard way, right? With anything. And the hard way is if you're on this little hamster wheel and you just keep running and you don't get anywhere. And that comes about when you create a strategy incorrectly, you optimize, you curve fit, you create this tremendous back test, and then you trade it live only to lose money, kind of like that equity curve I showed before. So that's the hard way. Don't do the hard way, okay? There's a much easier way. And with that easier way, you can create, once you learn it, you can create tons of strategies. And I'm going to talk more about that later, but I'm going to jump into talking about entries first, because that's obviously a big part of this. And, I've used the approach I'm going to talk about a little bit to develop over 80 strategies I'm trading right now. And do they all work all the time? No. I mean, some strategies fail. I had some fail back at the beginning of February. But a lot of times strategies will work out pretty well and things will work out. Okay, so I'm going to show in the rest of things I'm talking about, just want you to know that everything you have to consider is hypothetical. All these equity curves and stuff that I'll show. Past performance is not indicative of future results. I show a few testimonials of people who have worked with. It doesn't mean that everybody has the same level of success, because not everybody puts the same level of effort, for one. So just keep all this in mind as I kind of go through it. So let's kind of talk about some entry secrets, okay? So I'm going to go through each of these in detail, but I just want to kind of whet your appetite for them. The first one is, should we be concentrating on entries? The second is, what kind of entries should we be creating? And here I'll show you two that I actually use. And three, what about just being in one direction and entries going one way? What about that? And each of these, there's a pro and con to it, but there's a thought process to what I do, and really a kind of a secret behind it, behind all those, which I'm going to kind of show you. So, secret number one, most traders focus a lot of their effort on entries. And you can't see how many people are here, but like I said, we're pretty close to filling up the room. And I suspect it's because I said I was going to talk about entries. Everybody wants to talk about entries. Knowing when to get in the market. And then, oh yeah, hey, just worry about all that other stuff, the exits, the position sizing. That'll just take care of itself, because, if I get in the right direction, man, that's great. Well, why is that? Why does a trader focus on entries? And this little graphic's a good example. Think of the market as the little puppet, and you're the puppeteer. Well, wait, what does that mean? Well, it's about control, right? You're controlling the market at that point. Maybe you never thought of it that way, but you're out there and you're telling the market, hey, market, you've got to be, your moving average has got to be moving up, your short-term moving average and your long-term moving average is moving up, and your RSI has got to be below 80, and the volume has to be greater than the volume 5 bars ago, and this condition and that condition, then I'll buy. Okay, I'm telling you, market, those are my conditions, and if you don't meet them, well, too bad. I'm not doing it, right? Oh, that's a neat feeling, isn't it? Where you feel, oh, yes, I'm in control because I get to pick when I enter. The problem is that's the only time you get to tell the market. Once you're in a trade, then for a lot of us, it becomes, I hope the market keeps going up. Oh, I hope it turns around here, and that kind of thing. You go to hoping, but you don't really control it because now the market's going to do what the market's going to do, right? And you just are along for the ride, and hopefully it'll get out and I'll get a profit. But the point is, the entries are really all about control. This is where you tell the market where you're going to get in. Now, is that good or bad? Well, it's a nice way to feel about it. And if you can test it and prove the entry has validity, well, yeah, then it's good. But a lot of people get so hung up on all these conditions that they lose sight of what they're really trying to do. And they end up missing a lot of trends because, hey, everything except my RSI filter told me to go long, so therefore I didn't. Oh, well, maybe next time I'll lower my RSI filter. And now you got something completely different because who knows how it would work over time. But that's the way a lot of people think. So that's the first big secret. It's all about control. And when people have control, what they tend to do is neglect everything else. Because you become so focused on controlling your entry that you think everything else is just going to fall in place. Oh, if I come up with the perfect entry, hey, I'll make money no matter what position sizing I do or no matter when I exit. And that's just not true. But I guarantee, and you might say, well, I don't think that way. Well, I can pretty much guarantee if I had the same webinar today on exits or on position sizing, I probably would have gotten half the number of people to show up because that's how important entries are. And trust me, I'm not saying, hey, forget about entries, worry about everything else. I'm just saying you got to make sure you put it all in focus that, hey, entries are a part of it, but they're not all of it. So that's a key, and that's really the first secret. The second one is because of that control or that need for control, most people create entries that are way too complicated. They put a lot of conditions on the market. And again, this kind of ties into number one, where they think the more demands, which is a really good word for it, a demand that you put on the market, the more demands you put on it, the better you think it is. Yes, I need these 10 things to all line up, then the market will do my will and go up in price. That's how most people think. And you might say, well, is that really a secret? Well, it is. If you just look at what people do, it is. I'll give you an example. Here's what somebody a while back shared with me of their entry, their system, all their variables that they were optimizing. And, it might be kind of hard to see, but they talked about, it's based on some kind of Keltner channel, which is a pretty well-known indicator. And for the life of me, I never saw the code. So I have no idea what in the world all these different parameters are. But this is honest to goodness true that somebody had all these as their entry conditions. And there's probably 20, 40, 60, there's probably 80 conditions there. So 80 things had to line up before they would make a trade. Wow, you talk about complicated. And, well, okay, you could say, well, hey, but what if it worked? Well, do you think it'll work? And some of you are answering. Well, here's what it looked like in the back test that the person did. Did an almost 11-year back test, which you'd say, wow, well, hey, 11 years, that's pretty good. That should be enough to prove it out, even with 80 entry conditions, I guess I'll call them, or entry parameters. Well, the reality is, I mean, if you just look at the year-by-year profit, you'd see right off the bat, you're like, well, this isn't that good of a system. I mean, the first 5 years it lost money, and the last 3 or 4, it barely made money. It really only made money 2, maybe 3 years. So you could argue, hey, this back test isn't good enough. But if you pull the curtain on the live trading, and everything to the right of that gray line is out of sample, that's what's important, right? It just kind of falls apart. So this isn't to say every single complicated entry is bad, and it's not to say every single simple entry is good. It just says this is the kind of thing that can definitely happen. And the point, although I really didn't talk about the simple entries being effective, but that's kind of where I'm going with this, obviously, is the more complicated you make things, yeah, you feel more in control, but it doesn't necessarily mean things are better. Just give you a couple examples. So here's one. This is a Japanese yen strategy I actually trade, and you can see the blue is out of sample. So I stopped developing this, I think it was in 2012 or so, somewhere around there. And ever since then, it's been chugging along. Now, yeah, it's had some flat periods, it's had some drawdowns, but it just recently, this was a couple weeks ago, it had made a new high. So it kind of continued on this same path, and it's pretty simple. I just kind of visually drew it out for you. What you're looking for here, and you can program this, and you could go and test this on any market. Maybe it'll work, maybe it won't. I suspect it'll work in some different places. I've used it in some different areas. But, the ultimate proof is you go and you test it, right? So regardless of what I say, oh, Kevin said this would work, you go and verify it for yourself. You don't rely on me and just start trading it. You go back and you verify, and then you say, yeah, okay, I agree, or no, Kevin's an idiot. That doesn't work. Okay. And I guarantee you can find markets and you can find time bar sizes, time frames where this will not work. Guarantee it. Because most things don't work on most markets, right? So this one, I just show the long signal. And so what you're looking for, your signal bar is the one on the far right. And you're looking for a lower low, then another lower low, and then you're looking for a close that's above the high of the bar before. So at the close of this bar, if this is true, and that's true, so 3 conditions, pretty simple, you say, buy next bar and market. And then if it was a short signal, it would be just the opposite. You just kind of mirror it. And you're looking for, in that case, the the exact opposite. So it's symmetrical, which is nice as far as entries, where you're not biasing one side or the other. Both can happen just as easily. So that's one example. That works pretty well. Here's another example, and this one's on Bitcoin. It's actually on the Bitcoin index, which you can't trade, so there are going to be some differences between that and, let's say, Bitcoin futures, which just started trading back in December. The first one might have started in November, but no, maybe they both started in December. But anyways, what I'm doing is I have some different times of the day or night where I want to look at what happened. So I'm not looking at every single bar necessarily, but certain times, and I've identified those times as what I would call turning times, inflection times, something. They're significant time periods, so it might be, I don't even remember what it is for this, but it might be 2 a.m. And I say, okay, at 2 a.m., that's my signal time. So that means signal time's true. And if my momentum is up, if my close is greater than the close a number of bars ago, then buy. Okay? Now in Bitcoin, obviously, if you had done this way back last year, if you could actually have traded it, you probably would have done really well without a short signal. But we'll talk about that in a little bit, of just going in one direction. You can just do the opposite to go short. So this has a lot of potential to use just about anywhere, because what you're doing is a simple momentum, but you're also tying it to a certain time or times of the day or night. So, and you might say, well, why would you want to do that? Well, let's just say you're trading Forex. The start of the Japanese session time might be a significant time. And then when Europe kind of wakes up and they start really trading, that might be a significant time. And when the US wakes up and they start trading, it might be a significant time. Now, that doesn't mean there's not, there's definitely trading going on all the other times, right? But if you look at those times, they're usually times of higher volume, maybe higher volatility. There's a couple different ways to look at it, but that's kind of what I did here. Is I looked at some significant times and said, okay, well, those are my key times that I'm going to base what I'm doing off it. So that's another example. And this one I do trade live with Bitcoin futures now. The first one I trade with Japanese yen. I've done that for a number of years. And, it's definitely worth, I'm not going to tell you it works everywhere, because like I said, they don't, but you can go off with this and you could spend quite a bit of time testing, and you're probably likely to find somewhere where it works. And you can see by those two examples, simple entries can be pretty effective. Now, obviously, I didn't tell you what the exits are, but for those of you who have ever heard me speak, and I've got some former Strategy Factory students here listening in, my exits tend to be pretty simple too. Simplicity is a big thing on what I do, because the less you constrain something, the less rules you have, I think the more likely it's going to work on unseen data, which is what is going forward, right? All right, so let's kind of move on, talk about secret number 3. And the real key here is you got to be careful when you're creating your entries, because everyone has a tendency to create entries that match what they think the market should do, or what they know about the market, what they think about it. So, just look at a stock market. This is the mini S&P. And a lot of people will look at this over the past year or so and say, man, I got to come up with a system that goes long, because that's the way the stock market's going. Well, yeah, that's a great theory in hindsight, but then you have this happen, uh, which was February of 2018, just last month, and you know that's bad. Or you have a bias like this guy had. Uh, this guy actually had a quote where he said, "It's literally impossible, 100% certainty, blah blah blah, that this particular instrument would keep going down." Yeah, see what happened to that theory. 100% predictable. Yeah, well, maybe in the long run it is, but the short run, he might have gotten wiped out. So you got to be careful about your biases because they can really lead you down a bad road. So I mean, just think about this guy, okay, where he said literally impossible, 100% certainty. How do you think he's gonna develop his entries with that in mind? I mean, he's certainly going to be really biased because he's 100% certain. And he's probably not only biased with his entries, he's probably biased with his exits. Hey, I don't need a stop loss. It's 100% predictable. You know, hey, I can bet all my money on this, right? Position size. He's probably biased with that. So you got to watch out for your biases there. Especially, obviously, it all starts with entries, but don't let these biases get you. And one of the big things where biases kind of manifest themselves are with entries. The best strategies, I think, go long and short. And for most markets, they should probably be symmetrical. You can go up as easy as you can go down. If you're trading the euro, uh, the EUR USD forex pair, or the euro futures, it can go up, it can go down, right? There's no inherent bias that says over the long run the euro's got to go up or down, right? So that's why you want kind of a symmetric entry. And here's the main point, don't let your biases trip you up. Ultimately, you've got to test it and, you know, let objective testing tell you what to do. So those are the three entry secrets. Don't concentrate just on your entries. Try to keep your entries simple and try to have them go both ways, long and short. If you do those three things, you're going to be ahead of a lot of the pack of people who are just, either so biased that they're always going long or just unwilling to think a simple entry can work, or people who think the entry is all that matters, because it really doesn't. Okay, so I think Francisco's on this call, and this is one of a student who's done really pretty well for himself. He's in Brazil, and he trades full time now. And in 2 years that I've been working with him, he's gone from 0 to 53 strategies, and he's now fully algorithmic trading. So he's a lot of those things I already talked about. If they were biases or things he was doing, he's probably no longer doing those because now he's doing things the right way, which is pretty neat. All right, so the past 30 minutes or so, hopefully you agree it's been pretty well time spent. It's been a good use of your time. And I'd love to obviously talk a whole lot more. Somebody mentioned, hey, are you ever going to do one on exits? I probably will sometime in the future do a webinar on that. But there's only so much I can cover today. But I want to at least get you some feeling about entries, and then kind of lead into how I can help you take that information and kind of take the next step. And that's through a workshop I do. It's all day from 8 in the morning to 4 in the afternoon Eastern time. It's live. It's online, so you can do it out of your house. Some people are in Hong Kong and stay up all night. There was a guy last month, Jason, who he and his wife were kind of tag teaming and stayed up all night. They were in Australia. I'm like, that's pretty tough to listen to me talk for that long. But so I do this workshop, and what it does is it takes more than just the entries. It takes everything you need to create a good strategy. So I use this process and kind of go from a trading idea. Well, really, you start out with goals, then you go to a trading idea, and then you go to all the way through all this testing to where you're running real money. And the entries are really just part of this trading idea. So it's kind of what I talked about in the first half hour is just one little piece of that one block. So you can see there's a ton of other stuff that you really have to do to really get going. So if you decide to join me on that, there's an 8-hour class. I give you some strategies I use myself. Now the ES and the RTY took a little bit of a hit this past month, so we'll talk about that in the class. You get 4 months of my email support, so it's just me answering. I don't have a whole staff. This is just kind of like a sideline thing I do because once I wrote my book, people wanted to learn. So I don't have a company that runs this. It's really just me. So I give you that, and I also give you a bunch of bonus videos on a whole bunch of different topics. And there is a method to the madness of how I came up with this total value. For example, when people request strategies and I develop strategies for them, I usually charge about $1,500 per strategy. So you can kind of get an idea. You get a whole bunch of stuff. And the way I could have priced it out is just do it real cheap and try to get as many as possible. But what I ended up doing was charging a little bit more. Some will say, hey, wow, you charge way too much. But I'm able to dedicate time to a limited number of students, which is huge. For anybody who's dealt with me realizes I'm pretty quick at answering emails. It's almost an OCD thing with me where I hate to see emails pile up in my inbox. I want to answer people. And I'm the only one who answers. So, I can't have thousands of students. I got to kind of limit it. And that's kind of what I do. So I end up charging a little bit more. And, the other neat thing too is what I found is when people get something for practically nothing, they don't have much invested in it, right? Oh yeah, it was only $99, so what's the difference? But if you invest a significant amount of money, chances are you're going to actually work at it because, hey, I just plunked down this money, I got to work. And that's what I want because I want people who work at this. All right, so that's just a start. I do give you a whole bunch of bonuses. This Japanese yen strategy I already talked about today, the one I trade, the one I just showed you. You get everything, all the code. It's unlocked. You can do whatever you want with it. Trading your personal account. If you're a hedge fund, please, don't be trading it. I give you an unleaded gas strategy too. Those two, like I said, it was $1,500 a strategy. That's $3,000. There's the equity curves for those. And last year, both of them together, if you traded one contract of each, you would have gotten back 17,000 in hypothetical profits. That's pretty good for two strategies. So you get that, and that's a $3,000 value. But the way you got to look at it is you have a couple choices if you want to get educated and you want to learn how to build strategies the right way. You could go it alone, and that's what I did. I went alone. I read some books and stuff, but I basically just kind of went on my own. Or you could find some slick talker. I'm not a slick talker. I'm not a salesperson. Hopefully you've realized that just by listening to me. I'm pretty pathetic as a salesperson, I will admit. I can't convince you, and I don't want to convince you. Uh, I want people to convince themselves that this might be something for them, not having me convince them. So you can take that first route, and it'll probably be hard and expensive either way you go. Or you can follow what I do, which, like I said, you can Google me to death, and you'll find pretty much only good stuff. And you'll see my track record is I pretty much have a proven method to build strategies. Does every strategy I build make money? No. But over time, they tend to do pretty well. So here's some guys. All these people traveled to Cleveland, where I am, back in September of last year. And the one guy isn't hanging in the tree. I just put his picture up there because he had to miss dinner. But I had him over for dinner at my house, and this was right before we ate. These people are all Strategy Factory students who took the online class and liked it enough that I decided to have a live kind of advanced class. I don't know if I'll do it again. It was a lot of work, but it was great because all these people showed up. And you might say, well, who cares? Who cares about these people? Well, the thing is, all these people are part of the student base. They participate in the Strategy Factory forums. They also participate in the Strategy Factory Club. So what's that? Well, this is another bonus that you get when you join the workshop. And what it basically is you learn how to create strategies in the class, right? So you create a strategy. It has to pass some tests. You then give it to me, and I monitor it and all the other ones for 6 months. And if it performs well, if it meets certain objectives, which you know right off the bat, then you share them. So, like, I believe last month there were 10 or 11 strategies that passed the 6-month test. So that would mean if you had one of those passing strategies, you would actually get 10 other strategies. So there were 11 that passed, yours, and then 10 more. You'd get those 10 strategies, the full code, and you'd know it worked for 6 months. And you might decide to trade them. You might decide to just look at them and use them for your own ideas, whatever. But the point is, you actually are in a group with these guys, who are all developing strategies. So it's really kind of cool. I don't know anyone else who does anything like this. And so far we've had, I think, almost around 200 strategies that have passed. Now, obviously, you won't get them all. You get basically a certain amount for everybody else who passes when you pass yours, but it's still a great way to build up your strategies. These guys also participate in this factory forum. It's a special locked forum, trading forum for only us. Can learn a lot of stuff there, share things. That's pretty cool. So that's your second bonus. And there's over a couple hundred traders that are part of that. So, I just keep stacking it. And, at some point you got to say, well, what kind of excuse do you have to not do something like this if you're interested in trading? You can say I don't have the time, and you can say you don't have the money, right? Those are always big things. Oh man, I just don't have the time. I just don't have the money. Well, I'll tell you what, if you really think you don't have the time to dedicate to developing trading systems and spending some of your free time doing it, I can't counter that, because if you don't have the time and you know that, don't sign up. Don't sign up for anything. Don't even trade, because any kind of trading you do, you're going to have to put time in. This fallacy of, 5 minutes a day or 15 minutes a day is bull. It's put out by people who just want to grab your money. There's no way you can go up against professional traders, hedge funds, CTAs, all these things without putting time in. So, just don't believe that. Now, the other part is, A, I don't have the money, because you're probably thinking, well, this is going to be expensive. I don't have the money. Well, I've got a pretty cool program, which is another bonus to help you with that. If you sign up for a Tradestation account and you fund a new Tradestation account, Tradestation has agreed to refund via commission rebates 100% of the course fee. So that means you will eventually get the course paid off. Now so what they do is they normally charge you a pretty reasonable commission. They will give you a rebate of 20% off that commission. So it's a little bit each trade you make, and you get it back once a month, but eventually it pays off. And it definitely works, because I used it a couple of years ago to buy a trading computer. So it can be free. And if you decide to sign up, I can walk you through it. I have a rep at Tradestation who deals specifically with me. And, it's signing up for the workshop, then you open your Tradestation account, you start trading, and then you get your rebates. It's pretty straightforward, but it works. Okay, so that's the third rebate. Basically, you get the course for free. The only problem is I can't guarantee, if you're listening to the recording here, I can't guarantee that this program will still be around. Tradestation could just end it at any time. So that's something to keep in mind. Okay, so again, here's what you're going to get. The class, the strategies, the email support, the bonus videos, and more strategies, being able to participate in the factory club, and then the rebate. I mean, there's a lot here. But, if your trading's going good, and maybe you just came here just to get some entry ideas, hey, just keep doing it. I'm not going to tell people to change what they're doing just because I'm doing it. Hey, what you are doing works. Just keep doing it. Simple as that. I mean, that's ultimately the judge, no matter what anybody says. I mean, I've seen people do things in the most crazy manner possible, yet they make money. And I've seen people who seem to do everything perfectly and they lose money. Ultimately, your account growing or falling is going to tell you if your trading's going good. And if it's not, hey, maybe you need to go with something that has worked for a lot of people. So here's a student, Eric. He was in that picture that I showed you just before. And we were talking about the Strategy Factory Club. I think now he's up to 8 strategies that have passed, and then he received 86 strategies in return for his. So he's got tons of worthwhile strategies to look at. That's pretty cool. All right, so a couple more bonuses, and then we'll kind of wrap it up, and we'll kind of move on. But everybody's talking about Bitcoin, Litecoin, Ripple, all this other stuff. So I'm in the process of running some Bitcoin strategies. I'll share whoever's becomes a student sometime in spring, so within the next couple months, share what I've done. We'll talk about things, because it's kind of a little tricky market. It's a brand new one, so you got to kind of watch out. So I'll help you out with that. And then the other cool thing about, you say, wow, 8 hours online class, there's probably a lot. And yeah, it's kind of like drinking water from a fire hose is my joke. I always tell people, but you can repeat the class. You can come back next month. So, I have a class next Tuesday, and I've got a handful of people who've attended previously who are coming back. And the neat thing about that is, one, they tend to ask some really good questions once they've been exposed to the material. So anybody new attending gets the benefit of that. So that's pretty cool. So, there's the water in the fire hose. Uh, like I said, you can take it over and over again. So you add all this up, and realistically, it's well into five figures of the value of what you're getting. Uh, and honestly, I wish I would have had even half of this back when I was struggling as a trader. But I never found anything like this. And like I said, I just didn't invent these numbers. People have paid me these kind of sums, and so you put it together. The course would be a great deal at 5,000. And honestly, if all it did for you was helped you with the current strategies. This is the old give a person a fish, you feed him for a day kind of thing. So I give you some fish, I give you some tradable strategies. Then I teach you how to create your own. That's the important one. So I teach you how to fish, and in the long run, that's where the value is. The strategies are nice, but teaching you to build your own is really the key. And then, when you add that with, hey, all I got to do is open a Tradestation account and learn Tradestation. Well, now I'm letting you use my boat, right? Not only did I give you some fish and I'm teaching you how to fish, now I give you all my fishing gear in my boat, and you go out and do it because it's costing you nothing. It can cost you nothing. That's pretty cool. So you add all that up, and like I said, I realize this is not cheap, but it's also a pretty good bargain when you look at all you get. So if you're interested, just go to my website and click on Strategy Workshop. Whoops, sorry. And you can sign up. But, you really, like I said, you have two choices. You can do nothing and just wake up tomorrow and it'll be just like today. Hey, that's fine. There's nothing wrong with that. Or you can decide to invest in your trading future, learn how to build strategies the right way, give it a shot, and see how it works out. And, I do have a money back guarantee. If you sit through that first session on the live day and oh man, this just isn't for me, just let me know. In 3 years of doing this, I've had 2 people do it out of hundreds. So a couple people have done it, and hey, it's not for everybody. All right, so real quick, just one more student. This is Shamil, who last couple times ago I was in New York, a couple years ago, met him. He's a great guy. I think the bottom sentence that he is really the key. I have full confidence in my trading. That's pretty awesome, isn't it? To have confidence, because then you trade without fear. So Shamil's doing pretty good. All right, so if you go to my website, kjtradingsystems.com, just click on Strategy Workshop, go to the bottom. There'll be info there. All right, so we're going to do the autograph book giveaway. So get ready. Type it in the question box. And if you don't know where the question box is, you should see a whole list of things, and one will say the question box. The fourth person to answer this correctly, I'll give you an autographed copy of my book. I'll mail it to you no matter where you live. And it seems like usually the people who win are overseas, and so I have to fill out the customs forms and all that. But hey, you get your book. So the fourth correct answer, just name one mistake traders make with entries. And just type it in the question. 1, 2, 3. Okay, we got 4. So Dennis S. And thanks, everybody. We got a lot of right answers, and so that happened pretty quick there. But Dennis S., you got the fourth correct answer. You said 2 complex entries, and that's perfect. So just send me an email, Dennis, and to kdavey at kjtradingsystems.com. I'll type that in. and I'll get in touch with you about how to get your book. And so I just typed that in the chat box. And again, I'll give you guys a link to the strategy workshop in case you're interested. There is one next. I run these about once a month or so. And the next one is next Tuesday all day. So if you're interested, hey, it's a great time to hop on it. There's still a couple spaces left for it. And again, for those of you didn't know what the answers were, focus on entries. Too complicated. Don't be long and short. Those are just some of them. There were obviously more. So that's about it. So what I'll do is, looks like we got about 5 minutes. So what I can do is start going through some questions. If you have some questions to add, please do so, and I'll try to get through them. If I miss your question, just feel free to send me an email. I'll be more than happy to answer it. It's just sometimes they kind of scroll too fast and I kind of miss them. So with that, I'll kind of go back up and let's see if we can answer any. Okay, so Gary's asking, do you have any planned webinars on exit or position sizing? I probably will, some free webinars, but if you sign up for the workshop, obviously, then you're in a whole different world where, excuse me, we talk a lot about position sizing, we'll talk a lot about exits, and then, even if what you learn in the class and you're like, man, I want more, all you got to do, you have me for support, and I'll do whatever it takes and help you out however I can, even if it's kind of above and beyond what I teach. So, and I do that for quite a few people. So, and as long as you're on my mailing list, which I'm assuming most of you are, you'll get invited to whatever free webinars I have coming up. Okay. Brad has left, but he asked about the first setup. Do I think it will work in any time frame? No, and the answer is probably not, but I don't know exactly where it will work and where it won't. The key is you test it and you find out, right? Rick has a question. Doesn't this strategy depend on trading on the trend? Since Bitcoin was going up so much, almost every long entry would have been good. Yeah, and that's a good point, Rick. Now the code I showed, which was a momentum entry, could actually go short too. So the system itself had a long component and a short component. And you could see by the equity curve, especially in December and January where Bitcoin was falling and stuff, it was making money from the long side and short side, which I think is important. Yeah, what you don't want to do is create a long-only Bitcoin system. That would have worked great until December of last year. So you got to be careful about it. All right, Cameron's asking, he only has a certain amount to put in a stock account. Do you think it's possible to start with low capital? It is possible. The problem, you run into a few problems. One, obviously, if you're trading futures, you run into like minimum lot sizes, and so you just can't trade it. The other thing that a lot of people don't understand or don't realize is you have a high risk of ruin with low capital. It only takes a few losses before you start getting in danger zone and not being able to make trades and that kind of thing. So what I would recommend to somebody without a lot of capital is don't worry about trading right away. Worry about learning how to trade and at the same time try to build up your capital. So, and I can use myself as an example. So I'd usually start out, I did this a couple times with small accounts and kind of got beat up. But then I would take a little break and I would try to improve what I was doing. And at the same time, I was trying to save money. So I had a full-time job. So I'd save money from my job in the hopes that when I was ready to trade, I'd have money and then I'd build up the money again. So that's probably the best way to do it. Try to build your capital and learn, and you can learn a lot and get a lot accomplished without necessarily live trading right off the bat. I think a lot of people get into trouble because right off the bat they're live trading. Um, you know, take a measured approach to it. That's kind of what I'd recommend. Um, okay, Kleber's asking, in my book, I teach how to evaluate entries and exits similarly uh, or separately. Um, and how can I test them if I'm doing like a stop and reverse? Well, yeah, that's a good question. There's certain times where you can't really break out the entries and exits separately. And there's a lot of times where you don't want to do that because they do influence each other. Um, but what I would do is if I was just testing an entry, is just have that with a simple exit or vice versa. But if you want to do a stop and reverse as part of it, just test it as a whole system. That's kind of the way I'd approach it. Okay. Robert. Oh, thanks, Robert. Robert said, true. He is very quick to reply to emails. So thank you. Gary, who's left, he wanted to know other options for workshop attendees. Any opportunity for someone who has a Tradestation account open. You could just fund a new account and then you should be able to do it. And let's see here. We got tons of answers. Dominic's asking, with a diversified portfolio, is it possible to end up consistently profitable each year? Yes, it is possible, but it's also possible to end up losing. Just because you have a diversified portfolio doesn't guarantee you're going to make money. It's the way I look at it is you do the best you can, but at some point there's luck's going to be involved, and you might just get unlucky, and you could still lose. So there's no guarantees either way. Francisco's asking if I trade strategies with random entries. No, but I've thought about it, especially when I see some of my entries never working. Jamie's asking, or Jaime, sorry if I pronounced your name wrong. What about MetaTrader? Works with Forex. Yeah, you can do it. The key with MetaTrader is seeing if you could do the walk forward analysis, because that's a big part of what I do. Now, you can do that manually, but it's a little bit trickier. But I use Tradestation. I recommend Tradestation. Most students use Tradestation, and then if you participate in the club, the code has to be in Tradestation format. So that's something to keep in mind. All right, a couple last questions. I'll let you go. Powell's asking, most of my strategies are intraday or go overnight. Most of my personal strategies are swing trading, which will last days to weeks. Usually they get out of losers pretty quick. But with the approach I teach, you can do whatever you want. So if you want it all intraday, you can do it. You just, it's just a matter of developing things that you like, and that's something we talk about in the class. That's a big part of it. You want stuff that you like. Okay, couple more questions. There's a question, would I recommend Python platform? I've never used Python, but if you can find that it works and you can test and optimize, you could probably use it. Another question, okay, looking at systems being traded by brokers, I noticed the difference between back testing and when it's actually being monitored. Profit curves always seem steeper in the early years. Yeah, and that's probably true because it's just the nature of backtesting. Backtesting is always going to produce better results usually than you see live. And that's just something, the more strategies you trade, it tends to kind of even out because you'll have some strategies do better, but it's something you got to watch out for. Especially if you don't know how the back test was created. Because people can throw up any kind of back test and publish it, and you have no idea what they did to get there. Uh, so you got to watch out for that. So Paul's asking if I've ever used E-ratio for entry expectancy. No, I have not. Can I use, say, if I pronounced your name right, can I use Tradestation in Germany or Europe? I believe so. You'd have to contact Tradestation, and if you send me an email, I'll pass along my account rep's name, and he can answer it. But I'm almost positive you can. And I don't know about taxes in Europe, so I won't be able to answer that. And last question: what do you think is a reasonable amount to start trading? From Raphael. It really depends on what you're doing. As far as, if you want a little portfolio of futures systems, for example, you want to be in the low to mid 5-figure range, maybe 25,000 or so. But it really depends on the strategy. So don't take that as, oh, I must have that much. The one thing you can do is, let's say you traded Forex, you could always start with mini lots or micro lots. And you can start with a lower amount of money there. Of course, it'll take you longer to build it up, but you can kind of get the feel for trading by doing that, which is kind of neat. So that's kind of how I would approach it. You in some of the things I give you as part of my workshop, we talk about account sizing and that kind of thing. So you definitely have to be careful with it. All right. Well, hey, I'll let everybody go. If I didn't get to your question, just feel free to send me an email. And again, thanks for taking time today and listening to me. I'll send you a link to the recording afterwards. You can listen to it. And happy trading, everyone.